Good morning, digital wildcatters. I like that. I got a symbol. It's about time. All right. This is a very important week. And do you know why this week is so important? One quick guess. Why is this week important?
Because it's the biggest golf tournament
Wrong.
of my...
Why is this week so important? Quick guess.
It's post-Easter.
No. It is post the first week in April. Why is that important? Because Yates males die the first week of April.
Oh, shit, dude. You're alive, man.
I'm alive. April
Awesome.
6th, my grandfather died. April 6th, my great-grandfather died. April 1st, my great-great-grandfather died. We stress that first week. I am here in the second week of April.
I've got good news and bad news for you, Chuck.
lay it on me.
The good news is you survived.
Yeah.
The bad news is we have been talking about the apocalypse and the nuclear winter, and that could be this year. So enjoy the next, 6 to 9 months while you have it.
Survived to go to the zombie party.
That's
There
right.
we
That's
go.
right.
All right, we're in. All right, let's jump right into this. We talked a little bit about this last week. Actually, we talked a lot about it. OPEC coming out with their surprise cuts. Boom, Mark, catch us up. What happened kind of post-apocalyptic OPEC cut?
Well, you had a pretty significant pop on Monday. I think the XOP was up just under 5% and then proceeded to give back about half of that through the remainder of the week. Now it's recovered again about back to that peak level last week on Monday because of something else we're going to talk about that broke over the weekend. So we're still in that tug of war, I think, between, what's the macro outlook going to do to demand?
Can we say what's the Macron outlook?
Exactly.
Ooh, yeah.
Damn.
Tie it all together.
Like that?
I did pick up some feedback from the institutional side that it sounds like there's still a cautiously constructive mindset in terms of what OPEC is doing here. Maybe not so much signaling getting in front of weak demand by cutting back, rather than setting a higher floor potentially. They did raise their official selling price to China, and then the notion that we've talked about as well is the discipline that continues in the U.S. upstream sector, and the threat of taking market share is much lower now. So a little bit bolder move, but again, it's not something that I think carries us in one direction higher. I think I read something this morning said equities continue to grind higher as we climb this wall of macro worry.
That's pretty poetic.
Dude, that was pretty good.
That was.
Let's.
Okay, so Kirk, here's what I think. One, and I haven't looked yet this morning, but the 4-year strip just didn't move last week.
Nope.
So near term was up, but 4-year strip didn't. And we still have a tail problem. People don't believe there's value in the tail of oil and gas reserves because we're going to be regulated out of business. Am I right? Am I wrong? Is that maybe explaining stocks up 5%, giving some of it back, and then our next story kind of making it up?
I think it's a preoccupation with, the next set of data points in the very short term around, are we going to have a hard landing? What continues to unravel from this banking crisis? What are central banks going to do? And, what's the overall state of health of the global macro where, when things go really bad, the energy equities take a pretty big backseat to everything else.
So Mark's basically saying, Kirk, you can't rearrange the deck chairs on the Titanic potentially.
That's pretty much the way I'm seeing the chairs being rearranged. To use a term of flight to quality, it seems that as we look at the macro, the Macron issues out there, which is we got an economy that's about to just, I think, go to the shits. You've got guys like OPEC is making cuts. You've got people like Shell. They're almost rewriting the ship, if you will. Shell came out, my boy YL, as you know, he texted me earlier today and said that I could talk about this. But basically, their focus with their shareholders now is that energy security is key. So we've totally backed off of it's the environment, stupid, to energy security is key. and reducing oil and gas production is, quote, not healthy. So I'm seeing a flight to quality. We saw Exxon totally get out of Brazil because they've spent billions of dollars and haven't found a lot of oil. They're sort of organizing where they're going to put their CapEx into things that they think are lower costs, higher quality outputs. But it seems like everyone's sort of putting the metal down to, we need to put more production. We need more production, but we also need more exploration, but it needs to be more efficient. What do you think, Chuck?
Mark and I kind of talked about this when we deep dived the Deloitte report. Just again, show me a man's actions, or show me a man's incentives. I'll show you a man's actions. Again, we all say this: we need more production, we need more exploration, and we trade at 4 times EBITDA. And so where's the incentive to do that? And so that's where I keep coming back to is when the shit hits the fan here, we're going to have one of two things. We're going to have $200 oil, or multiples will increase to 8 and 10 times EBITDA. And guess what? When we do that, we'll generate a lot more oil.
Yeah, I've been banging the drum. In fact, I've invested in quite a few exploration companies, technologies, because I believe exploration is totally underfunded. However, I don't think the big oil companies can actually spend a lot of money in exploration because they're going to get hammered by investors, especially as you got this sort of the clouds of climate. But I think they're resetting the narrative to be able to spend more money in those areas. I think we're going to see it. We're not going to see it now, but I think we're going to see it maybe the second half of this year.
I don't know what the capability or capacity to do conventional exploration, which is really what you're talking about, is kind of restarting or ramping that back up. Funding it is one thing because it's through this period of retrenchment and kind of stingy capital allocation. There has been a reticence to talk about things that are long cycle for the most part. That's why shale was attractive, et cetera. It doesn't matter now, but when we start talking about true conventional exploration, we're talking in, for deep water, for greenfield projects, you're talking in decade plus type of horizons.
Okay. Well, let me push on that, Mark. So why are we seeing in other parts of the world these big refinery projects? These are like 50-year investments that non-United States-based companies are making with people like China. Why is that happening? That's long cycle.
Because the international players, and that was a comment, the previous comment was one from the context of energy companies or oil and gas companies talking to U.S. investors on the institutional side. They didn't want to hear about long cycle. And so I think, at least a couple of the U.S. companies, a handful, are going to be part of the leadership to re-ramp that activity. I'm not saying that the internationals are not pressing ahead, and it's a little bit more opaque, and the actions, watch what I do, not what I say. The actions like long horizon refinery and petrochemical investments in China by Saudi Arabia, for example, speaks to that much longer view. Yes, we're going to be about our traditional business of exploring, finding, developing, and producing.
So if you're one of those guys that's wearing sort of the vest, well, I'm wearing a vest today, so I'm going to laugh at myself, but those guys that everyone makes fun of, the Chads, the finance guys that are
bros,
the finance bros that are listening to our show, and they're young, clearly. What does that say for their investment as a career in oil and gas in the United States? Or is this just a blip? From what I heard you saying, Mark, is we're being outflanked by internationals. What do you think is the prognosis or the vision for oil and gas in the United States right now?
We've talked about it in most recently about the Saudis and what they're doing with China and downstream investments. But also remember, we did mention that Petronas had come out pretty vocally and said that we're really going to put the pedal to the metal on CapEx, and not only domestically, but we're going to, we're really going to push the upstream investment and growth to the tune of, raising CapEx on an annual run rate basis, I think 43% over their previous 5-year run rate. So, nobody in the U.S. is in Europe, the big super majors are talking about doing that at
God,
that
it
level.
just seems so awesome to go against the grain, and this is
Right.
time to make money.
Well, but you know,
do you
it's
think?
almost back to the future, if you will, because early days in my career, the thesis from investors was we need energy exposure because it's kind of your counterbalance to the recession. You know, if it
Mhm.
happens, it was your inflation hedge that, and if you were disciplined enough when commodities had their run and you sold and take your gains, you could have 3 and 4 years worth of losses, and that's just how investors approached it. And then the shale revolution happened, and you put a cap on oil at, you know, for 10 years there at $60, if
Right.
you will. And you put a cap on gas at $3 or whatever it was for the shale revolution. And you no longer had that outsized gain possible anymore. So capital fled the industry for that and other host of reasons. I think if you're talent today, you're sitting there going, we've got an outsized gain out there somewhere coming at some point. We're going to be short oil. We're going to have $200 oil, and nobody deals with a crisis like the United States. I mean, you can say about our day to day, and we suck, and we play checkers.
I'm not saying we suck.
No, we play checkers.
I'm definitely not going to
and
say
other
that the UK sucks because we know people listening to the
Yeah.
show.
No, we don't. She doesn't listen. I'll tell her Mark talked a lot this
That's
episode,
right.
and he was wearing his Clemson jersey. But no, at the end of the day, nobody deals with a catastrophe like the United States. So when the catastrophe happens, we will throw all these resources at it. And so if you're sitting there at the table, you're going to have your run.
Oh,
Just be
say can. I mean,
Exactly.
Yes, preach it.
Just be sure when you make your money, put some of it in the bank.
All right, so Chuck, let's put your old hat on.
All
So
right.
you're this, wealthy guy flying private jets, raising money for people. Remember those
hold
days?
on, let me have a moment. Those were such good,
Cocaine strippers, whiskey. I mean, you probably still drink Jack Daniels because it was cool. But still,
The private plane painted as Eddie Van Halen's guitar was literally the coolest thing I've
mean,
done in my life.
So that's you.
Okay, that was me.
Chad walks into your office with a geologist and a geophysicist in tow and pitches you like, "Hey, no one's going into exploration. We are the crack team. We're young. We're going to go find oil. No one's doing it. Can you raise money for them or not?"
So
You kick them out of their office.
I still think you have to use the Bucky Brock approach. And Bucky Brock was classic New Orleans small oil and gas company. We were doing a fairness opinion because he had turned 82. He was selling the company. He had one offer from Key Production, which became Cimarex, which
Right.
is now, what is Cimarex called these days? They've gone to some other name. But
I'll
anyway,
look it up.
Anyway, so we were actually struggling on the metrics to say the deal was fair, even though he'd run this broad process. Only one bidder had shown up. And so he was bitching about
Coterra.
Yeah. So he was bitching about having to get a fairness opinion. And it was really funny because the CEO of the company, Ken Stuckey, was this great guy. And he goes, "Ken, why are we having to do all this stuff with Stevens, doing all this data and all this?" And he goes, "Well, we've got to get a fairness opinion for the shareholders." And he goes, "Well, does Key Production have to get a fairness opinion?" And Ken goes, "No, it's not material to them. They don't have to get it." And Mr. Brock looked at me and goes, "They're fucking me out of my company so bad, they don't even need a fairness opinion." But what Bucky Brock said when he raised all his money that he raised during the 70s, he would go to, think the hotel banquet room and, buy everybody dinner and get up there. And Bucky was the most honest person on the planet. A lady one time raised her hand and said, Mr. Brock, is this a risky investment?" And Bucky Brock didn't miss a beat and said, "Yes, ma'am. That's why I want to do it with your money, not mine." So I would be glad to play agent and try to raise money for these young whippersnappers. I just don't know that it's out there. And I'm not going to do it with my money. I'm retired.
Interesting. So we're calling a lot of people. There's an opportunity on the table right now.
Yeah, I think in the public markets, it's going to be very niche-y, if that's a word.
It is
at
now.
least in the leading edge. And I do have a pretty strong conviction in that it's going to create some value, meaning long cycle, international offshore exploration oriented type of opportunities. And you can play those in, first derivatives like EGADs, the offshore drillers, right? So,
Wow.
All I know is we said it here first.
We did.
Just saying.
Okay. If we can't find it, which we're all kind of saying at this moment, doesn't feel like we're out searching for it, can't find it. Do you go buy it? And what happened this weekend, Mark?
well, there was I guess a recurrence, as I would think about it, of a multi-year kind of running whisper of Exxon looking at Pioneer, right? Which I recall as far back as 10 years ago, sitting in some investor conference one-on-ones and this being a topic of conversation with the company. And this was when we'd transitioned from the gas phase of shale into oil. And there was a lot of excitement and scramble for initial positions in inventory and acreage and type curves, et cetera. And, XTO was finding its sea legs as a part of Exxon and having to play that Permian game, which was much more of an independence hedge fund well watching game. And that's just not the game that they were playing. And so there was all kinds of rumors that, popped up occasionally that so-and-so needed to buy so-and-so to get the juice of what XYZ independent had that they didn't have. Well, we know Exxon, Chevron, others have large scale positions in the Permian. This is a different phase of maturity, obviously, for the Permian. Is this something that's cropped up as a result of all the recent discussion about we're running out of tier 1, going to tier 2 inventory? The inventory life that supports growth in the Permian is inside of a decade. Certainly there's a scale up thesis as well. All of those things, but it's got the group up a little bit today. Pioneer has at least held on last time I looked. About a 5 or 6% pop this morning and traded about 5 times its normal volume.
So I'm at this point, Exxon buying Pioneer, I worry about the actual scale argument there because at some point, I get it. The more acreage you overlap, the more long laterals you can drill. It does feel like those deals get done enough out there that having more acreage, does it help? Okay, maybe I can buy that. Is there some leverage you have with the service providers, the rig companies and all that? Feels like you got all the leverage you want, even if you were hiring one rig these days, but maybe I'm wrong on that. There is inflation happening out there.
I just want to know what price per barrel did they put in for this for break even?
The forecast?
Yeah. That's what I want to know.
For years, Exxon always had just this, and you would know better than I would, but didn't they always have an incredibly low oil price forecast because that always supposedly pushed the best projects upwards? Or
there was a suite of price decks, as I recall, from flat to ramp to, it just depended upon where the capital priorities were and, what the duration of projects were.
Well, if this thing actually once we get more information, we need to break this down.
Yeah, well, we can do that because I'm not sure the scale. I'm not sure Exxon buying Pioneer.
Pioneer on an equivalent basis today produces more in the Permian than Exxon does. They're in the same neighborhood. Exxon is right at 600,000 barrels a day. Reinvigorated its objective to get to 1 million barrels equivalent a day by 2027 in its fourth quarter earnings call. Pioneer's right at, I think, 667 was the number or 662 was the number for 4Q run rate. So you're effectively slightly more than doubling on a current production basis if you're Exxon looking at at Pioneer's Permian production.
If you're Chad and you work for Pioneer, are you nervous right now?
Yeah, I think if you, well, Exxon's leaving Las Colinas, so
you basically need to move to Houston.
To the Woodlands.
in this,
Oh yeah, let's get more specific. The Woodlands.
In this scenario, which I have always referred to affectionately as South Dallas, but
so basically not that far.
Yeah, look, I think it was 2015 was when XTO got buttoned up in Fort Worth, and all of that was moved to Houston. It may have been later than that. I'm drawing a blank on. I think 2015 is when the campus opened, and then fully, and then a couple of years after that, XTO was.
I saw a BCG study that
relocated.
basically told us at Shell when we were looking at a ton of M&A activity that like 90% of acquisitions are value destroying. So I'm going to, this is a long-term play. I'm not sure it's going to be, it's a great, but we got to break it down. This is just right off the cuff.
There are a couple of pieces out this morning, just commenting on and without any more specific information than the facts and figures around the portfolios. But I thought one was particularly interesting. Doug Leggett at B of A talked about, free cash flow has peaked.
Yeah.
And, companies like Pioneer are looking at a pretty severe inflection in cash taxes in 2023, which certainly isn't helpful to how you think about valuation and performance relative to that rate of change, which certainly isn't positive if indeed that is the case. And basically the point is, look, from this point, it's pretty much a bet on oil prices. And historically, we've not paid up with a sustainable premium on, these types of things have always been viewed by investors to be somewhat transitory. And so there's a discount, a bit of a structural discount.
Yeah. Well, I mean, at the end of the day, there's one person that knows whether this is going to happen or not, and it's Mr. Sheffield. And when it's going to happen, he'll let us know.
Yeah.
I mean,
if you think about,
should we call him right now?
If you're Pioneer's board and management team and you're in your macroeconomic camp, and I've missed other kind of frenzied peak opportunities, if you will, where people are overpaying or it's kind of the stupid money bidder who wins. Is it something to think about in front of a hard landing? We've just been through a washout because of COVID, et cetera. Is it ultimately time to exit and combine that with the fact, yes, Pioneer's got 20 plus years of tier 1 and tier 2 inventory, but is there a step change better as an independent going forward that makes a higher valuation case?
Well, and the other thing to think about too is we used to always joke at whenever we'd run a sale for an asset, you're not trying to build a consensus. You're just trying to find one until you get retraded by that one. And then you say, just trying to find one with a backup bid. I mean, if you really think about it, how many people could buy Pioneer? I mean, it's not, I mean, it's the old Bum Phillips line about Earl Campbell, right? I don't know how big the class is, but it doesn't take a long time to call roll.
Yeah,
I mean, Conoco,
Exxon.
I mean, Shell's not going to do it.
Chevron's
they?
got a ton of acreage.
I mean, would Chevron be able to do that? I mean, maybe. I
know
guess.
a few key Chads at Conoco. I need to fish around for that one.
There you go.
I'm sure there's a discussion
I would think
going
just
on.
Given the direction that BP, Shell, and Total have gone in this whole transition conversation, that they'd be out.
Yeah, I don't see them being interested.
But I've been surprised before.
Yeah. No,
because it is a, for the kind of, I hate to call that any in that category a second tier, but just in terms of scale, obviously an addition to Pioneer for a BP would be exceptionally meaningful because they're now, at least from a market cap standpoint, smaller than ConocoPhillips.
I mean, this is a U.S. play, and I see a U.S. producer wanting to buy them. I don't see international players seeing this as a big play unless they're hedging their bets and believe that the U.S. is going to be that access to the oil in the U.S. is critical, probably most likely for export. That's how I see it. If you're international, I don't see it being a big play by an international firm like a Shell or a BP being interesting, but I could be wrong.
I mean, is there an intra peer group combination? I don't think so, but I mean, really the only one of size that, at least in the Permian, that makes sense is just from a pure parameters or attribute standpoint, and it's mainly size and focus is Diamondback.
Yeah.
Good call.
You got Diamondback. I mean, is there any reason for Oxy to sniff around, or they survived Anadarko? Why go back? Why go back there? And then I guess, I mean, it's not an EOG thing. They wouldn't do it, but
we'll see more in terms of commentary and speculation. We used to play this game, kind of who's next, what's next, or who's potentially in this orbit of
Can Toby Rice
suitors.
raise enough money to go buy him?
there we go. Natural gas prices sub $2.
Let's start a rumor right now.
There we go.
You heard it here.
You heard it here.
One last thing, just looking at consensus 24 multiples of EBITDA, EV to EBITDA, Exxon trades about a turn higher at 6.2 times versus Pioneer. So it's, it's something, but
Arguably accretive.
yeah. And Exxon's equity currency is more valuable than it's been, at least on a relative basis, in quite a while, just given the share performance.
Yeah, no. And if you're rich people at Pioneer and you're used to your dividend, you're not going to do it for a stock that doesn't pay a dividend. So you got that too. The other thing just to kind of throw out there is, I think there are 15 members of the Exxon board. 3 of them are engine number 1 that are committed to the transition, et cetera. So right now you're looking like, if you were going to do this, you got to get 8 out of 12 votes. Right?
Yeah, that's right.
And that's a little different than history. And so,
but I'm sure they're going to be pointing to their other competitors that are banging the same narrative, which is energy security. Climate is important, but not right now. That's not what we should be worried about. Yes or no?
I'd like to be in Exxon's investor relations office today, listening to the calls that they're getting inbound from.
Dude, I've always said this since the moment I stepped into this industry, that Exxon's the best in the world at just being straight honest. Like, they don't fluff shit up. I love how they just speak directly of what they want to do. What do you say, Mark? True or not true? I think they're always just the purest.
Yeah, they're very fact-based. They're very matter-of-fact, and they're very high conviction in that they've got the problem solved, right? They're
and that's comforting to grandma that holds
there's
her
also,
stock.
There's also been, historically, there's been a lot of frustration because they haven't been as, for lack of a better term, they haven't been as extroverted as some of the more market and analyst friendly management teams out there. It's, it's all relative in that realm. But they've been a lot more open, I think, particularly ever since they took on XTO and got in the shale sweepstakes, and a lagging stock has a lot to do with your willingness to engage as well.
No, that's true. So a former business partner of mine who started his career at Exxon was a production engineer and was in a bar and met a girl. Who do you work for? Oh, I work for Exxon. She said, which one? So there you go. All right.
Funny.
Let's jump to France. Macron goes and meets with Xi. So we have the France and China Power Summit. 6-hour meeting. Macron visits multi-day. Mark, what happened at that? Because it makes my stomach turn to even talk about it. Go ahead.
Well, President Macron was, I think, taking the opportunity to put some separation between France and both sides of this brewing conflict over Taiwan. Basically saying we're not going to be a vassal and get sucked into certainly military conflict, and that Europe is more than ever ready to stand on its own as really the third superpower. And so that's the political dynamic, distancing a bit both from China, but also I think in a more pointed way, making comments about distancing more from the U.S. And so, what are the implications of that? I don't know. My one story I saw was right after the French president, and I don't know if this is true or not, they'd asked them to at least delay the startup of this encirclement military exercise around Taiwan until they got out of the airspace. So it's another in the running threads of the running themes that we've been talking about. The Saudi push to invest in the downstream in China, what OPEC has done seemingly unilaterally, the notion that other currencies will ultimately be more attractive or more desired as a reserve, and that in the very tactical sense or the very political sense, they weren't happy with our answer on not taking the opportunity to refill the SPR.
Yeah,
and so the U.S. there's quite a bit more tension on all dimensions of the international relationship as it relates to the energy question. The military and geopolitics is something that I'm not certainly going to make any predictions about.
I mean, as an arrogant American, I love Paris. Paris is amazing. Now, the Parisians, especially the taxi drivers, they don't like me so much. But the rest of France, they know what we did for them in World War II. But when it goes to the politics, it's interesting because Macron said the worst thing would be to think that we Europeans must become followers on this topic and adapt to the American rhythm and a Chinese overreaction. It's hilarious how
I saw that.
I mean, Europeans are, I love their, arrogance too. But I think in some ways, as I look at this, we've seen France and other countries in Europe sort of like give us a finger every few years just to say, hey, you don't control us. But part of me thinks in some ways that the rest of the world are moving while us here are arguing over whether to drink Bud Light or not. It seems like there are some chess moves happening and we're sort of just watching it, but I'm nervous about this, Mark.
Well, we're preoccupied with scoring points on both sides in the culture wars, and our adversaries are those who are looking to maybe get a strategic advantage that they haven't had for decades or maybe never had. Love this distraction. They're not playing that game.
I agree.
You guys stay kind of embroiled and fighting amongst yourselves about this stuff we don't even understand in a lot of the Eastern Hemisphere. We don't understand why it's such a big kind of front of mind political issue and why you're expending so much time on it. A lot of it is unresolvable because it's philosophies and morals, and
Macron did say that Europe must stay focused on its own objectives, which I would assume in some ways is energy security. Now, I laugh at that. We laughed at on this show before about how Europe sort of took their eye off of the ball and got into some compromised positions. But then I look at us, I'm thinking, are we not also in that same debate for our own energy security?
And this, I'm glad you kind of said Europe, and some would maybe look at what Macron was speaking about was speaking for Europe.
He's trying, but yeah.
Right. But if you look at France, their energy security is a lot different than some of their neighbors in Europe.
Right.
Right. Because they've got 70% nuclear power. They're not nearly as industrial, which means their natural gas intensity or dependency is a lot less
right
than, say, Obviously, Germany, for example, saw a pretty nifty bubble chart on this particular aspect. So they're speaking from a position of relative strength or relatively lower risk because they don't have those dependencies, right? So I think it's a sticky wicket. Look, Europe's playing the same, I think, the same game politically that we are. It's just been so preoccupied with the energy renewable transition part of ESG. It's been it's been the epicenter of it with COP a couple of years ago, et cetera, and what's come out of the green movement out of Europe. That preoccupation is very much the same in the maybe the endless debates and disagreements over issues that are distracted from or divergent from addressing the things that are front and center, which are things like energy security and strategic advantage.
So this huge nothing burger, I mean, this is the French popping up like they periodically do to
go back to drinking your wine and eating cheese.
Yeah,
Chuck.
we're still relevant. We're still relevant. I mean, why they have a seat on the Security Council in the UN is beyond me.
They're the French, bro.
But what's the old saying? There has not been a shot fired in the defense of Paris in the history of the country.
There's rioting going on though in Paris. I mean, are we seeing a French Revolution?
Yeah, because they don't want to retire at age 62, or don't want to have to retire at 65 instead of 62.
I do think
so.
This,
I think this is.
Hey, we would riot for that. You and me.
Yeah, exactly. I almost rioted when I had to retire at 51 or whatever it was. But no, I think this is going to wind up being a nothing burger. I think Xi knows that France speaks for nothing but luxury brands, and so this is a nothing burger.
Dude, I'm not trying to trash America's. I am American through and through, but I just feel like we're getting outmaneuvered by everyone. And maybe it's just narrative. Maybe it's just a nothing burger, but man.
I think, and from a France specific standpoint, that's probably right, but it speaks to a larger inability or a larger state of chaos in the Western players in this conversation, right? Those in the East have stayed focused on really what matters both tactically and strategically, and front and center to all that is kind of energy and military security.
So let's do this. So to kind of recap from last week, the European girlfriend, who's British, actually,
so she's not European.
Yes,
actually, now
exactly.
She's British.
She liked your line on that, but no, she chastised us for talking about Europe as this block, and Europe is actually anywhere from 20 to 30 different countries. They all have unique characteristics. So what we I've
traveled in Europe. You just need if you have a Euro passport, you can go anywhere.
Yeah.
It's just like a state to state.
You're gonna get me in trouble on the home front.
She doesn't listen. You just told me.
Yeah, exactly. No, so what we're gonna do on BDE is we're gonna close each show for the next few weeks, where we're gonna deep dive countries. We did a little bit of a deep dive on Germany last week. Let's deep dive France. Some interesting factors about France before we get started. Number one, camera phone was invented in France.
Really?
Did you know that? It's also the largest land mass in Europe. The croissant, their famous pastry, was invented in Austria, not in France. It's the 7th largest economy, but it's about 80% service and only 20% industrial. They are the leading agricultural power in Europe. And this is wild. You go to Paris and you walk around and there's not a building over like 3 stories tall. And I always found that kind of wild. And I was assuming that the French did that for aesthetics or whatever. Actually, in about the 13th century, they started mining a lot of gypsum and limestone. And so you basically have the city of Paris built on top of a huge quarry. And so they would routinely have sections of the city just collapse. And so they have a weight limit on buildings. And so that's why you only have 3 and 4 story buildings in Paris. So with that, Kirk, kick us off on French energy policy and what do we need to know?
Well, I don't know a lot about French energy policy. You're right about they have a ton of nuclear.
75% of their electric generation.
They've shut down a few refineries, mainly because of environmental concerns. They are a huge service economy. In fact, just comparing the two, because last week we did talk about Germany. France is roughly 20% of total energy consumption in the European Union. They're second to Germany, but Germany is just so much bigger. They have such a large mid-market manufacturing community and business cycle in Germany. It's very different than France. France is super fast. So I'd rather invest my money in Germany and spend it in France.
Yeah, the most visited country on the planet.
Well,
tourism.
They're a country strictly committed to net zero by 2050, and in fact adopted a law or a bill in February that basically is a renewable acceleration bill, which is interesting. It was introduced in September last year and was adopted pretty quickly, I guess, by European parliamentary timeline standards. And so, this includes an ultimate phase out of nuclear and a prescription for, I think the number is 90% ultimately to be renewable generated power, 70% of that coming from wind and solar. So it's a pretty long putt from here, just given where we are and the fact that you've got such dominance in nuclear in your power stack. And 2050 sounds like a long way off, but it's
they're trying to reduce their nuclear from 70% to 50% by 2035. So they're moving relatively quickly, and that's going to be replaced by renewables. And I think they increased their share of renewables in its energy mix to 32% by 2030.
Yeah, and it's interesting because they were trying to develop the nuclear bomb along with the United States and Germany in World War II. They had some success. And then you had the energy embargo of the early 70s. And so they were the country that went all in on nuclear. I think another part of that is they've got a ton of coal, but it's low quality stuff. It's really expensive to mine. So they pretty quickly moved. They always mine their own coal, but they moved away from their own coal and traded with other countries using their agricultural might. So they wind up going all in on nuclear. And I think, and just as an observer from the outside, it's like, the average EU electric cost is 25 cents per kilowatt. They're at like 22. So they're cheaper than average. They have, in effect, close to zero emissions because, they got nuclear. But the environmentalist story on waste was able to take hold. Anytime you have a drought, you need a lot of water to cool all those nuclear plants.
Absolutely.
And that raises the water cost, which, the public that needs to drink water, flush their toilets is going, hey, we're paying for a lot of this stuff. And
those bidets aren't flowing is what you're saying.
Those bidets aren't flowing. And then the last thing is, I think, and I heard Joe Rogan talk about this, and this makes a lot of sense, is, the problem with nuclear and Chernobyl, et cetera, is not nuclear per se. It's that we built all this stuff in the 70s and we just sucked. The whole world sucked building stuff in the 70s. I mean, go drive a car from the 70s. They just sucked. So we built these bad plants and these
the Pinto or
exactly.
the AMC Pacer.
Exactly.
Classic
the
70s, the Gremlin.
The Chrysler Toyota collaboration on the Sapporo was
Damn,
literally
man.
the worst car
The
ever
Nova.
made. But no, and so now what you're facing is you're facing shutdown of all these, a rebuild of all this nuclear capacity. And it's just going to be really, really expensive, way more so, because France should be your if you were committed to having zero emissions, et cetera, nuclear ought to be the poster child for it, and it's just not happening.
I've been
France.
following nuclear, and because it's fascinating to me. And oil and gas companies traditionally, especially in the venture groups, have been like, no nuclear. We don't invest in that. That's changed. Nuclear startups are starting to raise capital, even from oil and gas. I think the trend is France will probably going to back off of their nuclear ambitions to wind down. I just don't think they can afford it. If renewables do ramp up, great for them. It definitely gives them another piece, not only to hit their emissions goals, but also to offset, for instance, when there's droughts, and that's a huge issue. But I think that we're going to see France probably back off in the next decade. That's my call.
So I would think France has a bigger challenge than Germany does going forward with energy. Because if Germany wants to pivot, they do have their coal and they could go that direction. They can build their LNG import terminals. France is almost starting from ground zero.
And what
right
policy always dictates other policies? It's economic policy. Germany has the capability to generate income. And unlike France, I think France is more dependent on since it's a heavy service economy, they're more dependent on the economy being good around the world, because that's when people spend money, especially in France.
So the European fight on is LNG green energy or not, et cetera, France is potentially on a different page with other people, just given that they don't have their dependence, to Mark's point.
And
early.
they're just the French, man. They do things their way. They're cool.
Yeah,
that
and
way.
part of that, we talked about it a long time ago. Part of that taxonomy argument, among the EU energy ministers about natural gas also included nuclear, if you recall. So again, it's interesting from the standpoint of you got 70 to 75% of your generation stack is zero emissions nuclear, and you're not kind of digging in, if you will.
So is nuclear waste not counted?
That's a good
But
question.
let's just put that on the side. Let's get back to our audience on that one.
And you know what we need to do? We actually need to do a deep dive on nuclear waste, because really what we're talking about is like all the nuclear waste in the world like fits in an oil barrel or something. And it's not like
it's a very proportionally small
yeah. And
amount. It doesn't take a lot of nuclear to do a lot of damage, as we know, but at the same time, just the physical space requirements of disposal are not proportionally great.
Why is the nuclear waste? It's always in a oil barrel.
Yeah, that's true. Well, we should put it in an iPhone.
That's
case.
right.
Let's change
when we talk about crude realities on any of the business media, why do they show conveyor belts with 55-gallon drums on them?
Yeah.
Right.
Yeah, no doubt.
There's a whole BDE we could do on how did we lose the narrative.
That's right. That's
there.
right.
All righty, guys. Thank you for tuning in. If you like the podcast, share it with a friend, subscribe.
And
Masters.
Oh, give us the download on the Masters, Kirk. Sorry.
Look, I was hoping for a live finish, but just for the controversy. But John Rahm had the winner of the Masters, great Spaniard. He won on Seve Ballesteros' birthday. There's good history because on Easter is when the Spaniards win. So Seve Ballesteros, it's his birthday. He's won on Easter. Sergio Garcia's won on Easter. Jose Maria Olazabal, who used to play the same irons as me, incredible ball striker, has won on Easter. And now John Rahm. John Rahm got a really bad draw, so he had to play when the weather was the worst, when, Brooks Koepka, who's the most arrogant player I've seen in a long time, had the clear lead. He is arrogant. I mean, but I like him, but he's arrogant. John Rahm won, and I want to give a shout out to our Texan. He's an Aggie, Sam Bennett. He was the low amateur, the only amateur to actually play on the weekend, and he stuck it out and played like a gentleman.
Great story, background story about his losing his dad a couple of years ago to early onset Alzheimer's.
Absolutely.
And I think the quote his dad gave him that he has tattooed on his wrist.
You remember what it says? You know what it says?
Says, "Don't wait to do things."
Pops. That's right.
Pops.
Yeah. That's cool.
Kudos to him.
And he's in a match play 36 holes today.
I don't know if he's still playing.
He said he was going to play, and it's a match play where you carry your own bag.
Nice.
Do you think he flew home from the Masters public? I mean, did he fly like Southwest? How did he get back to A&M is my question.
That's a great question.
I know exactly how he got back. Private, probably Chucky's private, was one of the Aggie donors, private jet.
My former plane. Yeah.
He's on your former plane.
Nice. Digital Wildcatters, thank you for tuning in. As I said earlier, if you like the podcast, share it with a friend. Be sure to subscribe, and we'll see you next week.